and welcome along to the Property Academy podcast by Ibis Partners. I'm your host, Steve McKnight.
And I'm Andrew Nicol.
And tell the show, we're talking about the death of the downturn. Yes, it's over, done, been and gone. The bottom of the property market, in our mind, has already passed. And that's what we're talking about today. Now, last week, we had an announcement coming out of the Reserve Bank. Now, Andrew, what actually happened at the press conference? What did the Reserve Bank announce?
Well, they kept the official cash rate at 5.5%, which is exactly what everyone expected. But every 3 months, they release new forecasts. And there's some good stuff in the forecast, and there's some less good stuff in the forecast. So we're going to cover them both today.
Now, the good news is that the first forecast suggests that the downturn is officially over. So for all of you guys on YouTube, you'll be able to see this. For you guys on the podcast, I'll explain it to you. So 3 months ago, the Reserve Bank expected that compared to that point where they released that forecast 3 months ago, that property prices would fall by another 3.5% and they would stay low for about a good old year between December 2023, December 2024, before eventually recovering. And what they were saying is, in 3 years' time, we expect house prices to be 2% higher than at that point when they released that forecast. So over 3 years, only 2% up from that point. Now what they're saying is, actually, property prices, the bottom of the market, that hit in March 2023. It carried through to June 2023, and they expect that house prices are going to increase. They expect it's going to be about 2.6% higher by the end of the year. By the end of 2024, they expect house prices will be about 5.5% up from today. And a year after that, by the end of 2025, they think it'll be about 9.5% higher. In 3 years' time, they expect that house prices will have increased over 14%. Now, of course, we've got to take forecasts with a grain of salt, but the main thing that's interesting here is the change in the forecast. They thought house prices were going to do really badly. They thought they were going to keep decreasing. They thought they were going to stay low for about a year. Now they're saying, actually, they're increasing. And we see it in other data too that I'm going to talk about at the moment. But one thing that's really interesting is they're saying by the end of the September quarter, 2023, they expect that house prices will have increased by 1.6%. Well, we're almost at the September quarter. By the time this podcast gets released, we're going to be the end of August. So that means that we are 2/3 through the quarter ending September 2023. So if you're talking about the bottom of the market, looking at this forecast saying, oh, well, the actual data, it says that we haven't gone up yet. Yes, I know that, but when we think about the forecast, we're already 2 months through the forecast period is my main point here. And in fact, if we look at the most recent REINZ data, what are we seeing out of there? Because they release monthly data, Andrew.
Yeah, so the REINZ data came out as well last week. And so for 2 months, Auckland prices have risen. So there was a 0.8% rise in June, and there was a 1% rise in July. And remember, this is winter. This is before an election in winter. This is probably quite surprising data for a lot of people. And New Zealand as a whole has increased 0.4% in June and 0.7% in July.
You're such an old person.
What?
0.4, 0.7%.
What's wrong with saying that?
Just say 0.4 and 0.7
No,
like a normal
I say
person.
it this way.
No, they don't like it. We've had listener complaints about this.
I've changed to a different podcast. Oh, there aren't any.
No. Well, no, we haven't had listener complaints. But
Yeah,
if you
I
do
knew
find,
you're making it up.
but if you do find it annoying like I do when Andrew says 0.7, 0.4.
Well, it's because I was taught to write it that way.
Yeah, well, can you please write in on Instagram, message us, let us know how annoying it is. So
Send it direct to me and you'll get a response.
No, so that I've got data to be able to say people don't like it.
0.3% of people don't like it.
No, they all hate it. I've got conclusive evidence. Now, one other thing that's really important to note is that there's variation around the country, right? So some places in New Zealand are going to rebound much faster than others. And what we released as part of Andrew's private property newsletter, which is a newsletter we send out to about 27,000 investors every Thursday afternoon. Hopefully many of you listening actually get that newsletter as well. Is we release table showing both how each region changed in price over the last month. So Auckland about 1%, New Zealand less than 1%. But we've also got these really cool graphs on the side where you can put that into context. Now, I've got to admit something to you. I created all of these beautiful graphs for Andrew.
You can't tell people this.
No, I'm going to tell everybody. Tell all 50,000 listeners, Andrew, what did you say when I gave you this table?
So when I looked at it, I know Ed can be a little quick to produce things sometimes. So sometimes he takes months to do something. Sometimes he does it overnight.
Speedy Eddie.
And because Speedy Eddie was so speedy with this, I thought he'd just draw in the lines. He hadn't actually made the graphs.
Oh, yes. I just made the data up and tried to pass it off as if Jen Baird from REINZ had released it. But no, but what's interesting about these is, and we'll put the link to this in the show notes so everybody's able to get it. But if we look at a region like Southland, so over the last month, house prices in Southland region have fallen by 3.6%. And you might say, well, that's really bad. But when we look at the graph, we actually see, well, house prices in Southland over 12 months are only down 3.3%. So house prices there go up, they go down a bit, but realistically, they haven't changed all that much over the last year. A 3.6% drop doesn't mean a lot because they were up maybe 0.3% in the month prior.
But then Taranaki...
So don't you say anything about Taranaki, please. No, yes, okay, fine, we'll talk about it. Taranaki house prices increased 0.3% over the last month, but they're down 5% over the last 12 months. Now, the total decrease over a 12-month period isn't what you want to worry about. It's the trend. So if I look at Wellington, house prices up 0.4%, not 0.4%, but 0.4% over the last month. But see how it seems like there was a little bit of a kink and they might have bottomed out a couple of months ago. They've been on a slight, very small increase over the last couple of months. So it's not just the last month's worth of house price changes that we care about. What we also care about is putting that into context and say, what does that look like over a 12-month period? And what does it look like over the last 3 months? How do we feel about that? It's quite interesting. If I look at Otago, house prices there were up 1.4% over the last month. But if you look at the last 12 months, they're down 0.3%. Oh, I just did it, Andrew, myself.
Yes!
I know, I'm useless. So what that tells me is Otago property prices have been very, very flat for the last 12 months. So to me, that says, well, the bottom of the market's kind of already been around for the last 12-ish months. So anyway, that's very interesting. If you want to check out that data, link is down in the show notes as well. Now, of course, one other interesting thing is that when we send out this newsletter to 27,000 people, we get a range of responses.
Yeah, bear in mind, this is our entire Thursdays normally. We get private property all ready to go. I do a nice video for everyone. We check all the numbers.
Andrew records the video 7 times because he has a stumble and then swears obnoxiously.
That's actually what happens.
And we get a range of responses. Now, what I'll do is I'll read out to you one that we received from a reader of the newsletter, Matt. And then, Andrew, I'm going to let you react to this and ask you a bit of a question. Sure. Now, Matt's actually got some fair points. He says, in precisely 0 other industries would any other group of co-opted organisations attempt to delude themselves like this. A tiny blip up from the bottom indicates the downturn is over. We've hit the bottom. Prices are on the increase, etc., etc. We are basically at a completely unsustainable level of house prices. We've got inflation pressure, wage stagnation, coupled with high interest rates, high rents. Effectively, he's saying house prices are unsustainable. Then he wraps it up by saying, however, at this stage, considering property in New Zealand is the most overpriced in the Western world and the least affordable it's ever been, I doubt it. Effectively, I doubt we'll see house prices increase. Now, Andrew, let me ask you the question which Matt's really getting at, is it too early to call it the death of the downturn?
Yeah. I mean, we're working on very recent data. We're working on 2 months, but we're also looking at patterns here, Matt. So, I mean, there are comments like you say that house prices are unaffordable. Well, the Reserve Bank are saying they are more affordable now, right?
They're saying they're at their sustainable level, not their affordable level. They're very careful to point out the difference.
Yes. They're at a sustainable level. So that would probably indicate to me that they're a bit more comfortable with where house prices are. I know house prices are expensive. Yes, they always will be. they're a house. It's the most expensive thing you'll ever buy in most cases. So we do have to take some of the emotion out of looking at the data. But yes, we are only looking at very recent data, and you're only going to know that it's the bottom of the market 6 months from now, when we've got 6 months worth of data, or 12 months from now, when we've got 12 months of data. But at that stage, if you're an investor or you're an owner-occupier looking to buy at the bottom of the market, well, it's too late. So we have to make a judgment call of when we think it is.
That's right. We've always got to make a judgment or a property investment decision based on incomplete data. By the time we get 6 to 12 months in the future and we can point back at the nice little curve and say, that was it. That was the point where property prices were at their lowest. It's going to be too late. And even if we think about Auckland's data, we saw property prices there peak in November 2021. But it wasn't until 3, 4, 5, 6 months later that we could look back at that and say, that was it. That was the peak. But there were a lot of people who purchased at the peak because we didn't know it was the peak at the time. Well, even if we think about January, when property prices had fallen by a bit in Auckland, it was still a bit too early to say that was the peak. And yet it probably would have been a good idea to look at that and say, well, is it a good time to buy a property at that specific point in time or not? Now, if you hold long enough, it's always a good time to buy a property. But it's not until we get a couple of months later that we can look back and say, well, that was what was happening at that time. But we need to make a judgment call about where we think the market's at based on that incomplete information, because we're out here trying to make property investment decisions. All of us, we make a decision every day about whether we expand our portfolio or we don't. And so that's kind of where we're at. And a lot of people say, Ed and Andrew, what's your view of the market right now? Is it a good time to buy? Are we at the bottom? So we're coming out and saying, look, we think, even though we don't have 6 months to look back to be able to say, that was it, that was the bottom of the market, there's enough information there to say, actually, we're slightly past it now. And I'll give you a couple of reasons why we believe that. First of all, we've got those Reserve Bank forecasts. We already talked about that. We've got 2 months of REINZ data, and we've got an increasing trend. New Zealand going up 0.4, then it was up 0.7. Auckland was up, I think we said 0.8, then it was up 1%. So we're getting a faster house price increase as we go month over month. We're seeing what we see in the market ourselves. I mean, Andrew, what are you seeing in the market that's suggesting that the downturn's been and gone?
A lot of activity, particularly in investors who have been maybe a bit more dormant over the last few years. So investors who have been investing for even longer than I have. So, I've got investors that have been investing for 30, 40 years who are now looking at ramping up their portfolio again. And these are people who have lived through downturns in the market. So the fact that there's a bit more activity, Tony Alexander talks about the FOMO effect. People are now worried about missing out on a good deal, and that's coming out in his real estate survey. I think these are signs that, we probably have got a consensus that we're at the bottom of the market.
Well, that it's been actually. That's already passed, probably about 2 months ago, because we're seeing property prices go up. The other thing is, of course, anecdotal evidence we hear from other people. We talk to a lot of developers. Some developers are out there saying we are doing more contracts at a single weekend. People are signing up to more properties than they have in 18 months. So we're seeing activity there. And just coming to Tony Alexander's real estate agent survey, where he does survey real estate agents across the country, we're seeing an increasing trend of more people showing up at auctions. A net 30% of real estate agents say that more people are showing up to auctions. A net 50% of real estate agents are saying more people are showing up at open homes. And even if we look at how they feel that prices are generally increasing at the moment or changing at the moment, for the first time since November 2021, we have more real estate agents saying prices are increasing compared to the number of real estate agents who are saying prices are decreasing. So is it too early? Well, if you look at one data set, whether it be CoreLogic, whether it be REINZ, it is too early to say that the housing market downturn is over and that we're now on the increase or starting to see prices creep up. But when you take that broader view and you look at the forecasts, you look at the REINZ data, you look at what real estate agents are saying, you add in what we're seeing on the ground, what I can see with my own eyes, and what other developers are telling me as well, you add it all up and it says, feels like we're past it. That's where we're putting our stake in the ground, saying it happened 2 months ago and that the property market is going to enter into recovery mode. Now, look, we might be wrong. In fact, numbers change all of the time. The Reserve Bank's forecast is definitely going to be wrong. They change their forecasts all the time. But It's all about we need to make a decision based on incomplete information as property investors, and then we decide what we're going to do. Now, that was all of the good news, Andrew, but talk to us about some of the bad news as well. What else did the Reserve Bank announce?
So they did announce that there's a 40% chance of one more interest rate hike to the OCR, so another 0.25%. And potentially that might come over the next few months. But again, they've released their new forecast and said that interest rates might stay higher for longer now.
Yep, so they've pushed it out by about 3 months, actually. I think at their press conference, they might have said that they expected it to be high for about another year, but when you look at their forecast, they've pushed it out by around about a quarter. Now, what's interesting, you might say, well, how are these forecasts made? So the Reserve Bank have a number of models where they look at, well, what do we think interest rates will need to be over time? And that's where you can see, in September, they forecast that the OCR is going to be 5.57%. Well, we know that the OCR is not going to be 5.57%. It's either going to be 5.5 or it's going to be 5.75%. But what they do is they've got a model, it spits it out, and so that gives us an indication about the likelihood that we might see another increase in the OCR. Now, you might say, well, what does that actually mean for my mortgage interest rates? Well, right now, not a whole lot. I've been looking at the wholesale interest rate, so this is what it costs the bank to go out and borrow money and then lend that money to you for your mortgage. The 1-year rate in particular hasn't moved much since the OCR announcement. Where we have seen some movement is in those longer term rates. The kind of 3, 4 and 5-year rate, the wholesale rates crept up about 0.2%. So we may see some movement there over the next week or so in those longer term rates. We'll report back on that in the next week or so. Right, let's wrap it up there, but please don't forget to rate, review and subscribe to the podcast. It really does help us get the message out to more people. And hey, if you're listening to this on your podcast app and want to check out some of those graphs, check out our YouTube channel. If you just Google Opus Partners YouTube, it'll be the first thing that comes up. And if you're on YouTube, make sure you hit that subscribe button for the YouTube algorithm. Thanks for listening to the Property Academy podcast. I'm your host, Stephen Knight. We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.